In the enterprise market, we've actually recently did a study, a survey, and we found that 87% of CTOs and CIOs are actually going to be investing, either deploying or investing in blockchain technology in 2023. Right. But however, 54% of them still conflate crypto and blockchain. So we definitely have education we need to do. I don't believe that the fallout is over yet. But by the same token, we observe this in other boom bust cycles, right? We observed this in the dot-com boom. We saw fraud. We've seen fraud even in traditional finance, right? We've seen major collapses happen. So I think this is part of the growth cycle. I think we'll still feel some more pain, but I think it's all net positive.
It seems positive from the enterprises, Medha, but just the macro environment, of course, has changed dramatically, not just in the crypto space. I'm talking macroeconomy, fears of recessions, interest rates on the rise. Are businesses not yet cutting back? Because we've seen, for example, with companies like Amazon and Microsoft, businesses cutting back on cloud spend. So they're still willing to invest in...
They are still willing to invest in blockchain because I believe that they can reduce overhead, streamline operations, and reduce compliance costs. And I think that they are looking to cut expense out of their budgets, right? And blockchain is a great tool for doing that.
Fascinating. And Michael, from your point of view, we've been speaking a lot about the collapses of exchanges. Are the miners next? Are there any stress points you've seen from the data your company's gathered?
Yeah, I think we really love to look at the data and see it from that point of view. And if you look at last year, you basically saw interest rates going up, a lot of asset classes going down. And we saw that from all of tech, we saw that with crypto, and we basically saw that following each other very nicely. Then we saw in the spring, May, June, we saw Terra Luna, we saw Celsius, and we saw Three Arrows. And that gave a few other corrections to the crypto price. Basically regains that over the summer. FTX happens, it takes another one. But the interesting thing here is that if you look at the realized losses in the space, people who put money into crypto and took them out at a loss, in the spring, that was $50 billion. In the fall with the FTX, it was $10 billion. So if you look at this from purely don't take the drama, don't take the memes point of view, then you would look at it and say hey, something happened, interest rates and so on, and now it's a shockwave ringing out. So basically we saw FTX as being a smaller thing from impact to the industry that way, and basically see that there might be other things, but they're probably even smaller than that. So I would say I'm quite optimistic when it comes to what happens in the space and the drama. Can never say drama is over. Yeah. It's crypto, but I would say. So
do you think we've bottomed here? Because the start of the year for Bitcoin, for example, we've seen a rally, but that has come, of course, in lockstep with a rally in risk assets like the Nasdaq and some of these US stock indices. So,
and I would say I think you'll probably see those things follow each other again, as they basically have done the entire last year. So let's assume, let's say interest rate starts to go up even further. We hit 6% and so on. Then we would probably say, okay, now the price goes down further. So I think they will follow those things. Yeah. So I think we've seen the correlation will continue with traditional asset classes. But so it's hard to say whether it bottomed, but it probably bottomed together with those.
Right. And Rene, you said you were optimistic for this year. How are you going to characterize 2023? Is this a year of rebuilding, or is it a boom year?
Yeah, it's a year of regenerative finance, I think. So, and the reason for that is, look, the crises we're facing as a society right now are at a massive scale, right? And many of them are mass coordination problems, whether that's climate change, that's the global poverty, things that are being discussed here. I'm here as representing a community of builders in over 150 countries that are building on the Celo blockchain. And right now there are more people starting a project in, say, Nairobi than in San Francisco or New York, and that's really, I think, important to take a global lens on that. And so for me, regenerative finance has been a bit of a buzzword in 2022, but I think 2023, it's really going to move even more into the center because, we're all, I think, starting to realize that the financial system as we've had it doesn't quite work anymore. We are sort of at capacity as a world, and we need to find ways to bring these externalities into the financial system. And I can give some examples for that, but to me, I think what's starting to happen, there's a bit of a decoupling where you're no longer just looking at crypto assets, but you're starting to see people buying, holding them because they want to participate in the systems, right, that they govern. And so the utility value of tokens, I think, is going to really move more front and center as adoption becomes a lot bigger at a global scale.
But do just unpack that term. You know, we should be very careful of buzzwords because they can go often very awry.
Yeah,
so
yeah.
regenerative finance, do give us 1 or 2 examples and how you see that playing out over the next 1 or 2 years.
Yeah, and so, you know, I agree with you. I think in this case it helps, in a way, rally also a community that's really across multiple chains, really global, and it's giving sort of people, you know, like a common ground. So examples, for example, let's take a project that is launching community currency in Curacao that's backed by tokenized food forest and other natural assets. And so really bringing some of what otherwise would have been externalities and sometimes, you know, not really reflected in the financial system and making them part of the currency system. And so as people use these currencies more and more, you end up preserving a lot more of these assets. And so you're really having these positive externalities, for example, on climate. There are examples like that that apply more to financial inclusion or just the way communities kind of work and grow. But to me, there's a shift here in the thinking as well. We're not just replicating stuff that already exists in the traditional system and bringing it on chain, but we're actually kind of going the next step now, and we're similar to the internet, right, where there's new use cases that are coming up.